Effective cash flow management is the lifeblood of any successful business. Cash flow refers to the movement of money into or out of a business, and managing it effectively is crucial for maintaining financial stability, reducing risk, and driving growth. In this article, we'll explore practical tips for managing cash flow, helping you keep your business financially stable and poised for success. Understanding cash flow is essential for any business owner. Cash flow is not the same as profit. It's possible for a business to be profitable on paper but still experience cash flow problems. This is because cash flow is affected by various factors, including accounts receivable, accounts payable, inventory management, and capital expenditures. By managing these factors effectively, businesses can maintain a healthy cash flow and reduce the risk of financial instability. One of the most effective ways to manage cash flow is to create a cash flow forecast. A cash flow forecast is a detailed projection of your business's future cash inflows and outflows. By forecasting cash flow, businesses can identify potential cash shortfalls, anticipate funding requirements, and make informed decisions about investments and expenses. A cash flow forecast should be regularly reviewed and updated to reflect changes in the business environment, ensuring that it remains a relevant and useful tool for managing cash flow. Another critical aspect of cash flow management is accounts receivable management. Accounts receivable refers to the amount of money owed to a business by its customers. Effective accounts receivable management involves setting clear payment terms, sending timely invoices, and following up with customers to ensure prompt payment. Businesses can also offer incentives for early payment, such as discounts or rewards, to encourage customers to pay on time. By managing accounts receivable effectively, businesses can reduce the risk of bad debts, improve cash flow, and maintain a healthy financial position. Accounts payable management is also essential for maintaining a healthy cash flow. Accounts payable refers to the amount of money a business owes to its suppliers or creditors. Effective accounts payable management involves negotiating favorable payment terms, taking advantage of early payment discounts, and prioritizing payments to ensure that critical suppliers are paid on time. By managing accounts payable effectively, businesses can reduce the risk of late payment fees, improve relationships with suppliers, and maintain a healthy cash flow. Inventory management is another critical aspect of cash flow management. Inventory refers to the goods or materials a business holds for sale or use in production. Effective inventory management involves maintaining optimal inventory levels, reducing waste, and minimizing the risk of inventory obsolescence. Businesses can use various inventory management techniques, such as just-in-time, JIT, inventory management, or economic order quantity, EOQ, analysis, to optimize inventory levels and reduce costs. By managing inventory effectively, businesses can reduce the risk of inventory-related cash flow problems and maintain a healthy financial position. Capital expenditures are another factor that can impact cash flow. Capital expenditures refer to investments in assets such as property, equipment, or technology. Effective capital expenditure management involves prioritizing investments, evaluating returns on investment, and exploring alternative financing options. Businesses can use various techniques, such as net present value, NPV, analysis or internal rate of return, IRR, analysis, to evaluate the potential returns on investment and make informed decisions about capital expenditures. By managing capital expenditures effectively, businesses can reduce the risk of cash flow problems and maintain a healthy financial position. In addition to these tips, businesses can also use various cash flow management tools to improve financial stability. Cash flow management tools include cash flow forecasting software, accounts receivable and accounts payable management software, and inventory management software. These tools can help businesses streamline cash flow management, reduce the risk of errors, and improve financial decision-making. Maintaining a cash reserve is another essential aspect of cash flow management. A cash reserve is a pool of funds set aside to meet unexpected expenses or revenue shortfalls. By maintaining a cash reserve, businesses can reduce the risk of financial instability, ensure continuity of operations, and take advantage of new opportunities. The ideal size of a cash reserve will depend on the business's specific circumstances, but a general rule of thumb is to maintain a reserve that can cover 3 to 6 months of operating expenses. Cash flow management is not a one-time task, it requires ongoing attention and monitoring. Businesses should regularly review their cash flow statements, identify areas for improvement, and make adjustments as needed. By staying on top of cash flow management, businesses can reduce the risk of financial instability, improve financial performance, and drive growth. In conclusion, managing cash flow is essential for maintaining financial stability and driving growth in any business. By creating a cash flow forecast, managing accounts receivable and accounts payable, optimizing inventory levels, prioritizing capital expenditures, and maintaining a cash reserve, businesses can reduce the risk of cash flow problems and maintain a healthy financial position. By using cash flow management tools and staying on top of cash flow management, businesses can improve financial decision-making, reduce risk, and achieve long-term success. Effective cash flow management also requires a deep understanding of the business's financial performance. Businesses should regularly review their financial statements, including the income statement, balance sheet, and cash flow statement. By analyzing these statements, businesses can identify areas for improvement, make informed decisions about investments and expenses, and drive growth. Moreover, cash flow management is not just about managing finances, it's also about managing relationships with customers, suppliers, and other stakeholders. Businesses should prioritize building strong relationships with these stakeholders, communicating effectively, and negotiating favorable terms. By managing these relationships effectively, businesses can reduce the risk of cash flow problems, improve financial performance, and drive growth. The importance of cash flow management cannot be overstated. Effective cash flow management can help businesses weather financial storms, take advantage of new opportunities, and achieve long-term success. By prioritizing cash flow management, businesses can reduce the risk of financial instability, improve financial performance, and drive growth. In the end, managing cash flow is a critical aspect of business management. By following the tips outlined in this article, businesses can maintain a healthy cash flow, reduce the risk of financial instability, and drive growth. Whether you're a small business or a large corporation, effective cash flow management is essential for achieving long-term success and staying ahead of the competition. Furthermore, cash flow management is not a static process, it requires ongoing attention and adaptation. Businesses should regularly review their cash flow management strategies, identify areas for improvement, and make adjustments as needed. By staying agile and responsive to changing circumstances, businesses can maintain a healthy cash flow, reduce the risk of financial instability, and drive growth. In today's fast-paced business environment, cash flow management is more critical than ever. Businesses face numerous challenges, including changing market conditions, shifting customer needs, and increasing competition. By prioritizing cash flow management, businesses can reduce the risk of financial instability, improve financial performance, and drive growth. By following the tips outlined in this article, businesses can develop a robust cash flow management strategy that drives growth, improves financial performance, and reduces risk. Whether you're a seasoned business owner or just starting out, effective cash flow management is essential for achieving long-term success and staying ahead of the competition. Ultimately, managing cash flow is about more than just managing finances, it's about building a sustainable business that can thrive in today's fast-paced business environment. By prioritizing cash flow management, businesses can reduce the risk of financial instability, improve financial performance, and drive growth. With the right strategies and tools, businesses can maintain a healthy cash flow, achieve long-term success, and stay ahead of the competition. In conclusion, effective cash flow management is essential for any business. By creating a cash flow forecast, managing accounts receivable and accounts payable, optimizing inventory levels, prioritizing capital expenditures, and maintaining a cash reserve, businesses can reduce the risk of cash flow problems and maintain a healthy financial position. By staying on top of cash flow management and adapting to changing circumstances, businesses can drive growth, improve financial performance, and achieve long-term success.